Hi everybody, my name is Vielka Valdez, and the film that I decided to do my report on was The Big Short. So my synopsis for The Big Short was it's a movie that unravels the events leading up to the housing crisis of 2008 and its protagonist who foresaw and benefited from the market collapse. It follows the story of Michael Burry, a hedge fund manager who discovers the fragility of mortgage-backed securities, along with Mark Baum, Jared Vinette, Charlie Geller, Jamie Shipley, who offshore the market and expose the reckless behavior of financial institutions. The images that I have on the side are all the characters. So this is Michael Burry, Mark Baum, Jared Vinette. This is Ben Rickard, who was brought into the story by Charlie Geller and Jamie Shipley. So, what was the housing crisis of 2000 or the Great Recession of 2007 through 2009? This was a global economic shock that affected the world's financial markets and banking systems. So, close to 10 million Americans lost their homes, over 30 million Americans lost their jobs. The unemployment rate went up to 7.3%, and more than $2 trillion were lost from the global economy. This one looks really long, but in short, the characters that I thought assessed or developed the most on the key business concept of risk assessment was Mark Baum and Ben Rickard. So Mark Baum was one of the only characters who truly went out there and talked to real estate agents, homeowners, uh, brokerage or mortgage brokers, and attended bank conventions to really see how big this bubble was. And Ben Rickard, who was famously quoted saying, every 1% unemployment goes up, 40,000 people die. So he was really a strong advocate on the risk that the average American would take on. In a real-world scenario, risk assessment is a crucial business concept to help identify and mitigate any potential risk, helping a business determine what could impact its financials, reputations, and also its community. And the example that I used was in a partnership. You have to assess the risk before you even assign yourself into a partnership. So your assets, the amount of liabilities you might take, and your roles in the partnership. The second key business concept that I really saw were the regulations and the failure to adhere to these regulations. So, the deregulations from the late 1990s and 2000s escalated the growth of these subprime mortgages and these CDOs. And the film also shows how banks would manipulate these credit ratings to provide favorability to these risky securities. Lenders also practice predatory lending through ninja loans. So in a ninja loan, you don't have to show any type of income or assets or job to be approved. In the real world, Dodd-Frank Wall Street Reform and Consumer Action Protection Act was passed. This is aimed to reduce the risk of the financial system and protect consumers. Qualified mortgage standards were also introduced. Now lenders had to really assess a borrower's ability to repay a mortgage, so ninja loans could no longer be a thing, and lenders now seek legal repercussions if they do not adhere to these regulations and laws, either monetarily or by losing their license entirely. So, ethical dilemmas. Mark Baum and Ben Rickard were the two characters who I thought really demonstrated these um, ethical behaviors and ethicality in finance. So Baum called out these big banks and really exposed them on what they were truly doing and their unethical practices. And Rickard also served as a guiding force for Charlie Geller and Jamie Shipley, the young investors, on what is ethical and in informing them on financial greed. In a real world, obviously, you would like to apply or join yourself with ethical businesses and create yourself an ethical business, which creates sustainability and a competitive advantage over businesses who are not ethical. And having this strong ethical framework work also increases your chances of partnerships with suppliers and stakeholders who share your similar values. The last key business concept that I really saw was leadership demonstrated by Baum and Michael Burry, both of these men whose forward thinking allowed them to short the market and make hundreds of millions and billions of dollars. Team empowerment was also a big one. This was demonstrated by Ben Rickard, who served as a mentor to these young investors, and team empowered leading to teaching autonomy and accountability. So, in a real world scenario, leadership can be held by a CEO, a shift manager, but in my belief, it can be held by any person, no matter what title they hold. Um, this creates autonomy, so letting others make their own decisions and trusting them to do it, and later leading on to accountability. So, through the decisions they make, letting them be held accountable for their good and bad ones. In conclusion, The Big Short really serves as a powerful tale, warning viewers and business owners, big and small, to adhere to all functional business concepts, especially the ethical ones. Thank you.